because they have a chance of possibly losing $40 billion. Hey everybody, I've been getting a lot of comments and our messages about what the short squeeze is. I think that's going on with GameStop, AMC, Nokia, and a few others. And so I'm going to do a quick explanation, very, very simple, and explain what's going on here, why you got Robin Hooders and you got the Reddit people teaming up against the hedge fund people, and a little battle that's going on right now. So let's get in my office real quick and I'll explain all this to you right now. So there's this little battle going on right now, right? And it's between the Reddit traders, the Robinhood traders, and Wall Street, the hedge funds. It started over a simple company called GameStop. You might have heard of it. You might have even shopped there probably a decade ago. It is a brick and mortar game company. You know, you go buy games, you trade in your used games. Well, over the years, just like other retailers, GameStop has been on a major decline. And although it's a great company, people are turning to online services and online products and online sales and all those kind of things. So with coronavirus, it is said that over 50% of the retailers in malls are going to be going bankrupt and closing out. That means our malls are going to be half empty. GameStop is one of those retailers, and they took a huge dive over this past year. But the interesting thing is that the hedge funds over this past couple months have decided to short this company even further. They wanted to bankrupt this company. And so this company was trading at $20 just like a month or so ago. And just like you would bet on stock for a company to go up and make some money, you can also bet on the stock and push it to go down to make money. And it's the same kind of thing. You make the difference. So if you bet on it at $20 and it drops down to $1, you make the $19 difference. But what if you were a hedge fund company? And what if you invested $1 billion to short the company? And so for every $1, you can make 19 back. So then for every 1 billion, you make 19 billion back if you're shorting the stock and it was at $20 and you're trying to get it down to 1. And that's what happened here. But not even that. They wanted the company to go bankrupt. Never mind that there's all these employees that work there. Never mind that there's a new CEO in the company trying to grow it and revise different things. Never mind that the company is actually trying to survive. These hedge fund people decided they were going to gang up on the company's stock and they could literally push it into bankruptcy. And that's what they did. And they didn't even just use their own money. They borrowed the billions of dollars to short the stock on GameStop. Okay, and if that wasn't enough that they had to borrow the money, and if it wasn't enough that they would actually make billions of dollars off of bankrupting the company, on top of all that, they over-leveraged the shares. Let's just say that there's 1,000 shares in GameStop. Well, they shorted 1,500 shares. How is that possible? It's not really possible unless they win. But because no one ever has to buy the shares back, because no one ever fights them on these kind of things, they usually just cash out and they make all that extra money. It's just like virtual shares that don't even exist unless somebody were to come along and fight them back. And that's exactly what was going on right here with the wallstreetbets group and the decision to take on the hedge funds and reverse this huge short position that they took. So a week ago when the shares were trading around the $40 mark, Reddit wallstreetbets decided to jump in and do something about it. Now, the hedge fund short positions, a lot of these contracts are expiring at the end of this month, which is tomorrow, Friday, January 29th. And so the trick is to make sure that the shares are higher than the $40 that they started off at. And their trick was to make sure that the shares would be lower at the end of Friday, lower than the $40. Now, for every dollar that is lower, they make all that money. But for every dollar that is higher than $40, they will lose money. And as of right now, the shares went from $40 to $250. That is a almost 700% loss. That means that if you put $1 billion in, you're going to lose $7 billion now. And so with them seeing the losses that they were about to incur tomorrow, they are doing everything they can to fight back. They're trying to get the White House involved. They try to get Pelosi involved. They actually got the app Robinhood to shut down trading on these stocks to stop the retail traders like myself and this group from actually trading the stock. They literally paused the stock while they were still able to do it. They were still able to trade while we weren't. And they got that to be done on a few different platforms several times throughout the day, trying to crash the stock to get the numbers back down because they were about to lose billions. And this is an entire game that's been going on for years. And there are so many people involved in this kind of stuff. And if we can keep this going, then by tomorrow, at the end of the day, Friday, they will have to buy back these shares at a much higher price, which will also spike the shares up even higher. And why is that important? Because they have a chance of possibly losing $40 billion. And these are people that specialize in shorting companies. They specialize in hammering a company down, their stocks down, hurting employees, pensions, and that's how they make money. And they've also manipulated the market since the beginning of the stock market. And it's been hurting people like us, retail traders. And so it's an opportunity now that we're able to now show them that we have just as much, and if not more strength. So the next time they try to bankrupt a good company, we'll be right there. All right, take care, guys. Boom.